What's going on, guys? Good morning, good evening, wherever you are. Welcome back. Another live stream here with the Everyday Growth Advisors. Pretty quick one today. Not really much to go over except for the fact that obviously we caught the wave down. Nice little price action movement the whole of yesterday, and that was pretty spot on. We've been kind of following this for weeks on end now. I've spoken about how we were in extreme greed up here. Spoken about how that development and capital will shift to the downside for a couple of weeks, and so we kind of played it perfectly upon the break of 4060. We saw a lot of that price action kind of get zapped down. Yesterday was a lot of low volume selling, not really much incentives for market dealers to take that downside just yet, mainly because of, as I mentioned yesterday during stream, that the OPEX of last week already kind of rolled out a lot of that gamma exposure that the market makers have been kind of holding on to. So we're kind of looking for a wave up here, back up to 4060 or so, to kind of have a continued momentum and then re-hedging of the price action back down. So I think today's price action should see a little bit of a bounce. That's what I'm kind of personally looking at. I'll be looking for 4060 once again. This is the key level. We've been retesting this level multiple times, and I think that that wave up into 4060, if we get higher than 4060, it's likely to be 4100. These are mainly the two key levels on the dark pool anyway that are likely to see rejections if we get this wave up. So right when retail starts to take downside exposure, that's when the market's likely to squeeze to the upside and set that off in a particular systematic manner. Not to mention that, as I've said, there's not many people that are hedged down here, not many people that are hedged down here. There weren't many people hedged down here. So we need that wave up to create that liquidity, stop a couple people out, people who are short and people who were taking additional shorts all in this area yesterday. Kind of stop all of them out as we get over 4060, get into 4080, maybe even get up to 4100. Then once that liquidity frees up, we can have market makers take that exposure to the downside and then have that wave down. So looking at something obviously like this, and then like that kind of. So it's going to take a while to play out. Remember, the market never moves in a straight line. But good morning, welcome in. I hope you guys having a good morning so far. Make sure you hit that subscribe and smash the like button if you can, and if you enjoy these streams. Also, go ahead, put your chart requests in the comments right now, because I'm gonna be done with my analysis very quickly today. It's not a lot to go over, but I'll be going over some things that I'm watching. Just giving you guys a very quick update. Not to mention NASDAQ, this is the slower moving amongst the indices, and you can see rightfully so, obviously. We're coming back into the chop zone here once we broke out last from this area, and this is a very heavy chop zone. This is a very significant level of support as well. So likely to see NASDAQ to go back and backtest 12,233, and then after that 12,400-ish. These two levels pretty much, which will be the key levels for us to backtest. And then once we get that rejection from here, once again, same thing as SPX for that downside extension. So NASDAQ, there you have it with the tech and disruptives. IWM also, as I've mentioned, kind of pulling back here, expecting and perfectly kind of coming back to 187, which I've been calling out for. I think next up, if it can bounce here, likely gets up back to 190 or 192.50. That will be the retest level once again for IWM. So we'll probably see something like that, and then another drop further down after that. So this wave will happen in a concise manner only after more exposure is taken on. We'll also see continued appetite in the VIX. This sparked off yesterday. But I think that as this market starts to pull back a little bit today, or into maybe tomorrow, or into the end of the week, we'll likely see this VIX exposure start to dwindle back down to 21, or even below 21 again, back to 20 or 18, somewhere in this region, and then maybe start to get back up again after that. As you can see, when VIX goes up, it doesn't go up straight, like all the way full throttle. It's in fact in very rare cases that happens, but when it does happen, it happens pretty abruptly, but over a period of time. It doesn't just happen like within 1 to 2 days. So it takes a while for the VIX to build up that fear, and therefore the same thing is going to happen here if we really do get that peak fear. US 10-year yield broke above 3.90 yesterday. I did mention on newsletter and also on the pre-market stream yesterday. This is the key level for us to watch. If we get above that 3.9 and then start holding above it, that further upside on the yield up to 4.2 or 4.4 is going to cause the federal funds rate to price in more rate hikes. And so we'll be watching this one pretty closely. Yesterday's bond situation didn't really get better, but neither did it get worse. Of course, we saw a little bit of a cooling down in the rates, so that's why the market's a little more likely to bounce today, mostly on the fat tail and then the short end of the bond market as well. The 3 months all the way to 2 years still pretty much spot on with the uncertainty, and yields are still increasing here and there. So 6 months bonds and 1 year bonds are really the most susceptible here. Dollar index not really moving higher yesterday's session, but we got kind of a chop movement, but eventually move higher to close the day. Today we're seeing still continued chop. 104.64 is the pivot here. That will send us up into 105 if we break that, and then if we break below this 103.63, that sends us back down. So looking for those two key pivots on the dollar index. We'll be keeping a watch on that, just in case we get further price action there. Energy has been the weakest sector in terms of outflow for hedge funds, with addition to retail XRT, which has seen a massive sell-off yesterday after Walmart and I believe Home Depot reported earnings. It wasn't really terrible earnings, but it's just weak guidance that got both of them. And I think Walmart actually recovered pretty significantly. The other one is consumer discretionary, and so that's XLY. Yeah, XLY. It's the other one that saw significant outflows, which is also one of the reasons why you can see one of the biggest holdings in there is Tesla. So you'd see a lot of outflows in majority of that sector. But then once again, you're coming into this dual zones all across the board, all across the market indices and whatnot. You're seeing a lot of these dual zones, key role reversals where we're entering back into. So that drop was very much needed. We'll see how if we can recover from that. Even look at technologies, even dropping back into these dual zones. Energy though. This looks like it has a broader story here. Below 82.50, I'll probably be a short. trader here, probably down into the 75s, but obviously taking profit as I go along here. So I'll be watching this pretty closely today and into the next couple of sessions. The other one is financials. I've been talking about financials being bearish for hot minute now, or rather thinking of taking bearish exposure on financials. So we traded a couple of financial names already this past week and a half. Wells Fargo, Chase. We traded Bank of America to the downside. We've seen some nice pullbacks on those as expected. And so this 35.50 level has been a pretty key level. We continue to watch that this week and sometime into next week as well. So these levels here, key level to take that short position on financials. Now, obviously, there is also the macro situation that ties into this, the bond market, and as well as the Fed rate hikes. Remember that when hikes come in, or expectations of hikes come in, that's not necessarily a good thing for financials. Even though, yes, they can pass the cost on the consumer, remember that the overall amount of loans that are taken on, and then the net interest on those loans usually tend to taper off, not really allowing for much growth in the top and bottom line. So overall, it usually ends in a muted response, and that's what kind of happened during the financials earnings this past quarter. Finally, some movement on semis back down to ground. They've been obviously very bullish for the past couple of months, and ever since we called out semis bullish after this huge breakout here, and then also reiterated the next wave up here for two very big breakouts on the secular trend. Now we're finally seeing semis come back to earth a little bit, but remember, once we come back to this 230 level, if we do, in fact, 233 is really a first level for a bounce here. In fact, looks like we're going to already prematurely bounce maybe. Then this might send semis further up again. So this is I want to play this pivot to pivot at this point because it's a little spooky. We don't actually know where this is going to bounce, but I will have more information on this in the next 1 to 2 weeks once I look at where the sectors are positioned based on the data. So I'll be looking at that one pretty closely as well. Another one that I'm looking at, not a very common setup. You would see this triple top on the daily with Lululemon. You have three very, very distinct rejections here. Not only that, just looking at the overall macro picture with this one, thinking about how U.S. consumer debt's at all-time high. You have a lot of inflationary issues. You have, just people more than likely going to save more money than spend more money in times like this. I don't think a lot of people are going to go out and spend money on Lululemon pants. So I might be looking for a short trade, possibly on Lululemon in the near future. Obviously, I'll post it on Discord, let them know when I'm going to take it. And right before I forget, remember, 14 days free trial for the Discord still available. You can go to our website, loancompoundgrow.com, or I think it might be in the description below, and join the Discord for free for 14 days. I think that, it's a great thing if you want to just be a part of a community that's really aligned with your goals and kind of trade with us live every single day. He underestimates this woman. Okay, I don't underestimate them. I'm just thinking about the global economy. Not only that, I have data that is suggesting that there's a slowdown in momentum. So I guess we'll have to see who's right. But I will be very frank and honest with you that I'm looking at data that supports my theory. It's not really just my opinion that is supported. I rarely make comments like this without looking at data, just so you know. I have a very simple approach to financial markets. I look at the probabilistic nature of something along with the likelihood of the event happening based on economic conditions, and then layer that in with my analysis of the stock itself. So when I tell you that there is a slowdown in Lululemon demand, this is largely tied to the social media mentions for the stock. Okay, so I'm not just cherry-picking data based on my feeling or putting a thumb to the sky and measuring the air temperature. So plans with the S&P 500 this morning, really simple. If we within the first 1 hour we don't rebound hard back into 40-60 or start that path up, then I think there is a more likelihood that we chop today and then all the way into the FOMC meetings, which by the way we didn't talk about, but FOMC meetings is really just a short thing to really get through today. The main thing that you need to know about is the market's pretty much at this point priced in the full hawkish expectation for that Fed meeting. What the lingo is going to be changing there, what the Fed's going to be likely to say, it's going to be the same thing over and over again. we're gonna be committed to achieving our path towards, curbing inflation down, blah 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 blah. We feel like the policy rate should be above so and so, and keeping unemployment at a decent level, blah 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 blah. The usual verbiage. Anything that is out of the norm is likely going to be viewed as dovish from the market. And so that's the reason why I say the path towards 4060 and 4100 is a very likely path in the short term for that retrace back up, like a snapback rally. And obviously we'll have to see how that plays out, because market makers don't have an incentive to push this further down just yet. They're not hedged. So if you're not hedged on something, you don't want things to go in that direction. So we'll see. If within the first 1 hour we don't get that move to the upside, then likely to chop or move further down. You got to play it, pretty much pivot to pivot. Okay, let's do some of the charting. Tesla. All right, always with Teslita. Y'all never cease to amaze me at your interest in this stock. It's a good thing. It's not a bad thing. Okay, key pivot points 214.50, and there was a bearish pivot which was 199 or 200 yesterday. Today, if Tesla continues to be weak, expect for the rejection at 200 to send this further down. If we break out of 200 and then start bouncing or basing above 200, I will be looking for a clear break above 203 for the upside play. So 203 is really going to be the main pivot. And if you're taking 203 upside, make sure you have your risk off below 200. Or if you really want to go risk off, you have to go around 198, around there, the maximum. So you're looking at like a $5 risk that you take on at the maximum here. And then your reward has to be at least $10 to the upside. So you're looking at 214 to the upside here as your target. So you'd be playing this huge wave to the upside. That would be the bearish trade. Pretty much this is your downside risk, your entry somewhere here. This is your upside. So this looking at as a 1:2 risk to reward ratio, roughly. That would be the best setup for the bullish side. For the bearish side, you kind of have a decent setup as well. I mean, I guess not as good as the bullish side, but your target would be around this 188 level, I guess. It would be around 188, right? So actually, in all seriousness, maybe the downside and the upside risk to reward ratio, it's better skewed to the upside. Just a tiny bit, not really a lot, but like it's tiny bit skewed better to the upside. If you take this to the downside, wait for that $200 rejection. Actually, the further up it goes and gets your rejection, the better, because that gives you that better risk reward ratio to the downside. 188 is pretty much going to be your target, but then you are not realistically going to take profits at 188. So you would probably start, taking some of your profits off at 195. Probably take another bunch off at 193. And then 190, you probably have runners by then. So, you're not really looking at a very nice setup here, to be honest. I rather wait for Tesla to come either further down or go further up. And then that sets up this trade to be much nicer. So, in my opinion, I wouldn't want to get involved with Tesla right here at this spot. To me, personally, remember, it's my personal opinion that I wouldn't want to play this setup right now. Because equal risk-reward ratios on either side, not really that great. It's like... it's all right. It's not amazing for a day trade. Just what I'm saying. Now, obviously, if you're gonna go for a scalp, everything here is great for you to trade as long as you can get the volume and momentum going. Then you have that on your end. You don't have to worry about the risk reward ratios that much. You can get the scalp going in either direction as long as you have that movement. Okay. Remember, you're watching Nasdaq on top of that to get that move that you want. If Nasdaq bounces or if Nasdaq continues to fall, that's gonna be your cue to trade Tesla, right? So don't do those things without looking at the index cadence. Super important. I hope that was helpful. NVIDIA. Once again, another really interesting one. Okay, so this was in a very nice setup for the past couple of weeks. And then so it went from an uptrend into a period of consolidation. You can see really nice start to the wick-off cycle here. Or rather the last phase of a wick-off cycle. You had that mark up phase, you had the distribution phase, right? A mark up here, and then now you're starting to see the break of this pivot, which might see the mark down phase, right? And I think what you need to do here is wait. With NVIDIA here, I don't feel comfortable taking this downside just yet. A lot of traders are going to get trapped into this. I will guarantee you that this is going to happen. And it's just my advice to stay out of this specific spot trade right now, because everybody's looking at this bearish right now, and you don't have any confirmation that this is indeed bearish just yet. What do you need? Just a quick poll and a quick quiz. What do you need in order for you to validate that this is indeed bearish now? And in the meantime, I'm going to set up the chart for Netflix. So what do you need for that validation? Honestly, same thing with Netflix too, right? Very, very similar scenario. So what do you need for the validation on both of these? Quickly, somebody, tell me. Quickly. Come on. Retest, okay. That sounds good. Retest is a good answer, right? So we need to see the break of this structure, right? And we need to, on top of that, we need to see the retest of some of these levels here, right? Either here, 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 wherever that it should be here, right? We need to see us with this. If you're going to say that supply has already ensued here and it's low, it's higher than demand, and we're indeed moving into the markdown phase, remember just the basic laws of supply and demand, right? Say you're looking at the markdown phase. You say, okay, now we're in distributive phase. Distributive phase already causes a disequilibrium process where demand starts to fade away. You have supply starting to take over, right? And let's say you do say supply is indeed higher here. Well, okay, you need to see how far supply is going to press down. But more importantly, you need to see how far demand is going to push this back up. And indeed, if demand pushes up where supply is higher, then you can start to take that short trade again, right? So you got to always remember your confirmation is always based around your logical view of where supply and demand is, right? It's not really about key pivot points. Sometimes it's about using your logic and then also looking at where the S&P 500 and the NASDAQ is, you know, sitting at key pivot points where that's likely for a bounce, right? And then also at the same time, the market maker activity, as I was mentioning, all of those things play into this very, very heavily, right? Not to mention NVIDIA trades on the NASDAQ. So you have to wait for that pullback to see where we end up. And my guess would be around 213.50. And if we get that rejection at 213.50 or higher at even 216, then that is going to be your entry for the short, right? More importantly, you don't want to play a short trade here when the market's shorting, right? You're going to get implied volatilities that are higher here. You're going to overpay for your put contracts. You're going to not have that profitability that you're looking at. It's one of the reasons why I didn't play NVIDIA the whole of this week. Mainly because I've been waiting for this pivot to break. And then once I see this pivot break, I'm waiting to see how price action is going to interact with this. My guess, we get right back up in here. And then after that, we get a big rejection. And that will be my entry for the short position, right? So that's how I look at NVIDIA right now. I know a lot of people might want to take the opposing view here and say just outright short it. But I want to be a bit more conservative. That's just the way that I am. I like to wait for additional layers of confidence. This trade's not running anywhere, guys. It's not going to go away somewhere. The market's still going to be here. You know, even if NVIDIA falls here, I would wait for the wave up to see where that demand comes in anyway. So even if it falls all the way to $200 and on Friday's live stream I come back here and I say, wow, well, you know, I was wrong. It doesn't matter because I'll be waiting for that wave up anyway to enter the next short position. Remember, this is just the first wave down. And this is the first breakout. That will come a second wave and then a third wave after that. So likely to see at least a 3-4 wave structure on a 15-minute time frame. And so this is your first wave breakout here. It's really just the beginning of it, if indeed it's the start of your distributive phase. Otherwise, it's going to turn out into a fake out, right? It'll be a fake out to the downside temporarily. All right, so I hope that's helpful. Netflix is a very similar story. Falling wedge pattern that saw a little bit of a fake breakout yesterday. Obviously, we managed to catch a bit of this yesterday upon the rejection and breakdown of 342. This is one of the stocks we were watching on the snipe list anyway for the week. So we managed to trade this down yesterday and make some profits off it. It almost stopped me out. I almost had glass hands on this one. But then diamond hands saved the day and we held the trade, broke down the rest of the day. We took profit somewhere really close to the bottom here. And called it a day with this one. I'll be very, very fully expecting this one to bounce as well today and show us some of the strength that it's been pent up with. Rejection of 342 would be perfect. If it goes higher, then it's likely to come up to 349. Those are the two key pivot points on Netflix that I'll be looking at for continued rejection or bounces for the upside. If it gets further than that, then it's going to retest 355, this upper limit of this zone here. So something like that. That would be the upside scenario. Okay, what's next? Okay, QCOM. So what's the question here? QCOM shares around 117 for long term. Oh, well, what's the question here, Kyle? Is there a question? What do you want me to, like, how do you want me to support or disprove your analysis? Or, like, I'm trying to understand what the question is here. Are you asking me if that's a good idea, or are you asking me if that's the right area to buy shares, or I'm a little confused. 117 is definitely a good spot for you to add some, but I wouldn't go like crazy on that if semis are intending to pull back more. And then if the entire semis here, SMH, let's say for example, bounces today, then this is going to be prolonged for a while too. So probably see a wave up and another wave down. Just on your thoughts, demand zone there, PE ratio is attractive. Yeah, I mean, I guess this is a decent spot. What I would do is once I get somewhere here, I would sell a cash secure put. If you're planning to buy the shares, you might as well buy them for cheaper, right? Sell a cash secure put, collect some premium in the process. If it does get assigned, you're long 100 shares. If it doesn't get assigned, you get to keep the premium for free, and then sell another cash secure put. Keep selling cash secure puts as the stock comes down, right? If you really want to own shares of this thing, that's the way you should do it. That would be my strategy at least. Has DVN stabilized here in lows 50s? DVN. Okay, I'm gonna do, let's see. Okay, so there's only one more after this. Okay. Has DVN stabilized? Well, it looks like a very strong demand zone here. It's hard to tell if it's stabilized. So first of all, what is this? Energy? What's the market cap? 35 billion, okay. Let's have a look at the quick financials here. What did he do? Exploration, development, product, Delaware Basin, Eagle Ford. Okay, so they do basically fracking, right? I guess some fracking and then some other kind of process as well. Okay, cool. Okay, so this is oil and gas pretty much. You know what? I would hold off. If you want to add shares to this, I would hold off. If you're adding shares to this, I would hold off a little bit. But you can do the same strategy. Sell cash secure puts, like let's say $50 cash secure puts if you're owning shares. If you want to, trade this, I would hold off. I would really hold off because energy is in that downtrend right now. And even XOM, a company like XOM, went all the way from 119 to 110 within just a week of trading. There is a big kind of a big supply of selling in energy sector right now. I would wait till that's over and you get a bit more color on where that sector is actually moving to. That would be my advice personally. Of course, if you're planning to take some shares, I told you, cash secure put, you have no problems with doing that. Can you do Google? Sure, that'll be my last one for today. All right, let's do it. Okay, so Google is one of the most nastiest freaking charts in the world that I have seen. Like, this honestly makes me want to puke. This gives me all kinds of like diseases while just looking at this. It's the most disgusting thing in terms of what this price has been doing. So I'm going to still try and decipher it for you, and I'm actually going to turn on the Heiken Aishi candles for this one because I don't want to be like, looking at gaps on gaps on gaps. For those of you that don't know what Heiken Aishi does, it averages out the past 6 candlestick movements. But yeah, this is a disgusting chart, right? Just looking at how it's moving so far, it looks like obviously it cleared out a big liquidity sweep right here, and then it's reversed pretty like terribly after that. Then you had the whole like Google Bard thing that came out, it's got rejected, and then got rejected again here. And it looks honestly like it wants to get down into this 85 to 87 range again, okay? Now, there is no guarantee that this will happen, like, right away, because, it could still go back up here in 94, 95 for a mini pullback, and then come all the way back down again, because remember, it is one of the biggest percentage allocations on the S&P 500, so you have to still be careful. The way that I would play this is, honestly, the risk-reward ratio from here to down, unless you're day trading or scalping, is alright, but you have to be, like, super risk averse. So your risk off has to be like 93, 94 if you're taking the short trade. And then you have a decent risk reward ratio to the downside at 87 or so. That'll give you roughly a 1:2 risk reward ratio if you're going all the way to 85 maybe. But if you're taking this to the upside, then you have to be extremely careful. I would say my advice is stay away from this until it gets either down, okay, or it breaks up and starts bouncing above 97.50. Like, that would be my advice. That's the way I would play this. This is one of the reasons why I'm not even trading Google right now. It's just super disgusting. Like, look at this. Like, what even is this? So yeah, that would be my advice. Just my 2 cents. Hopefully it's helpful. Okay, last one. Looks like a tight squeeze on Square. Market's going to open 2 minutes here, so I'll do Square really quickly and then end the stream right now. So Square, it looks like it basically, I mean, like we've been talking about this one for a couple of weeks now as well. Hit that supply zone very, very nicely. Once again, 3rd time's the charm or 4th time's the charm here. Looks like it wants to go all the way back down to the demand zone. Now, there's no guarantee that it gets all the way back there, but obviously from here, backtest, retest of 74.27, and then rejection will send you back down to 67.74, and then 67.74 breakthrough, maybe another retest of around 71 or 72, then the further drop into 60s. After that, that would be the downside trade. If you're looking for the upside trade, you want to get a bounce above 77, 77. Let's just say 77. You need a big move up here, 77 bounce, and then you start your upside trade back up into the 80s. And I would do 85 calls first. Get some profits off as you get along here. Maybe at 80, your TP can be 80, 82, 83, 84. Those levels, and then ultimately you can take your profits or leave runners on the table for that one. All right, I hope that was enlightening to you guys. Once again, hey, 26 of you here. Can we get to 20 likes today? Come on. We got to get to 20 likes before this stream ends. Come on, help me smash the like button, man. I'm pretty sure that you guys can do it today, right? If you guys enjoy this stream and you, you know, see the value in it, you want to help me out, you don't need to give money. You don't need to do anything. I don't tell you to, you know, in any way to contribute to this. The only thing I ask for is for you to smash the like button. 15, come on. We need 5 more people. Are 5 more people going to help out with it? 4 more? Come on. 4 more people. Let's do it. And there goes ding, ding, ding. All right. Well, we need 3 more people. I guess that's all she wrote today. Have a good one, guys. Stay safe. Manage your risk. Make sure that you have everything in check. And happy trading. See you guys on Friday for another pre-market live. 1 more like away from 20. Thank you, guys. I appreciate it. Love you all. Peace.